Ladies and gentlemen, good day and welcome to Q4 FY24 and full year 24 earnings conference call of Aditya Birla Sun Life Asset Management, hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jignesh Shial from InCred Equities. Thank you, and over to you.
Yeah, thank you, Shashri, and good morning, everyone. On behalf of InCred Equities, I welcome all to Aditya Birla Sun Life AMC 4Q and full year FY24 earnings conference call. Along with us, we have Mr. A. Balasubramanian, Managing Director and CEO, Mr. Parag Joglekar, Chief Financial Officer, and Mr. Prakash Vogle, Head Investor Relations. We are thankful to the management for allowing us this opportunity. I would now like to hand it over to Mr. A. Balasubramanian, Managing Director and CEO of Aditya Birla Sun Life AMC, for his opening remarks. Over to you, sir.
Yeah. Thank you, Jignesh, and good morning to everyone. I hope you all had the opportunity to go through the earnings presentation, which is available on the stock exchange as well as on our website. Before highlighting the broad economic outlook and providing an update on the mutual fund industry and the ABSL AMC performance for the quarter ending March 2024, I'm happy to share that Aditya Birla Sun Life Mutual Fund, being one of the oldest private sector mutual funds in the country, established in 1994, is getting towards the completion of 3 decades of its presence as one of the pioneers in the Indian mutual fund industry. We feel proud to serve the growing needs of investors in the country and also contribute to the largest success of the mutual fund industry as one of the highly committed, well-governed mutual fund players. On the 30th year of our operation, we have set aside our growth path to achieve new milestones in respect of all our business verticals and make this year one of our memorable year for our employees, investors, stakeholders, and shareholders. Let me now begin with the economic outlook and mutual industry update. We are in a dynamic global landscape with elections happening in numerous nations and territories, collectively representing over half of the world population. The global macro picture in the early 2024 presents a cautiously optimistic outlook with the underlying dynamics influencing growth on one side and interest rates on the other side. We believe India will continue to remain in a bright spot with strong government spending in building infrastructure, increased investment coming from the private sector, ably supported by high domestic consumption. As is known, the Indian economy continues to exhibit resilience with a healthy projected growth rate in excess of 7% in FY25, supported by stable inflation, interest rates, currency, and rising forex reserves. Indian equity market has consistently outperformed global counterparts, reflecting the strong fundamentals of the Indian economy and the earning potential of the companies across sectors. One should not be concerned with the recent market volatility, which largely stem from the regulatory and mutual fund industry initiatives on a smaller mid-cap segment disclosure, which are aimed at enabling investors to make informed decisions. India's strong structural drivers and economic fundamentals remain intact, encouraging investors to continue participating in its growth potential. We also believe that widespread growth will continue to be the driver of our market sentiment. With respect to the mutual fund industry, as of 31st of March 2024, the quarterly average AUM reached 54.11 lakh crore, growing with 34% on a year-on-year basis, as compared to 40.49 lakh crore as of 31st March 2023. During the quarter, the mutual industry witnessed equal net sales of around 1,600,000 crores through new funds offering as well as in existing funds. The total NFO collection was around 18,900 crores, and the balance funds flows have come into the existing equity schemes as well as hybrid funds, sectoral thematic, arbitrage and multi-asset allocation funds. The industry SIP flows grew by 35% year-on-year from 14,276 crores in March 2023 to 19,271 crores in March 2024. The total number of mutual fund folios stood at around 18 crores with an increase of 22% year-on-year, with unique customer base around 4.5 crores. The individual average AUM grew grew by 43% year-on-year from 23.27 lakh crore to 33.31 lakh crores and contributed 61% of the total AUM. B30 cities with an average AUM of 9.83 lakh crores accounted for 18% of the total AUM. Moving on to ABSL AMC performance, turning on our strong foundational pillars, our focus has been to strengthen our main levers of growth in the organization by bringing in the right talent and making strategic changes in certain leadership roles. In fact, our momentum in the last quarter is on the back of uptick in equity performance coupled with a well-established fixed income franchising, a robust sales engine, close to the ground connections, tech-enabled services, and a growing digital business network. Building on this synergy and energy, the business is on a meaningful momentum, and our team is geared to make the most of it. This has been witnessed during our annual investment conclave, which we called as Voyage, attended by over 2,000 partners in Mumbai in the month of February 2024. In Q4 FY24, our overall average assets under management, encompassing alternate assets, reached 3.46 lakh crore size, reflecting a 20% year-on-year growth. Notably, our mutual fund quarterly average AUM reached 3.32 lakh crore with equity quarterly average AUM standing at 1.5 lakh crores. I'm happy to say that our SIP numbers during the quarter has witnessed good uptick, moving from 1,005 crores in the month of December 2023 to 1,250 crores in March 2024, making a 28% quarter-on-quarter increase. We have added around 6 lakhs new SIPs, which is approximately 2.5 times increase compared to the previous quarter. As part of our endeavor to acquire new customers, we have added approximately 11.5 lakh folios during the year. Of these, around 7 lakh folios were added in Q4 FY24, bringing our total serviced folios to around 86 lakhs. Individual investors with an average AUM of 17.6 lakh crore now constitute 52% of our assets. Additionally, the contribution from B30 cities stands at 17.5% as of March 2024. We have seen good momentum build up in our sales numbers, reflected in our healthy retail growth. The impact of building a robust sales support ecosystem that consists of virtual relationship managers, Sampark for onboarding distributors, direct channels to service HNIs and family offices, digital distribution, and service to sales is coming to its full potential gradually. Our enhanced engagement at the relationship manager level, increased satisfaction with the service effectiveness, positive sentiment towards the fund performance, and an improved digital transaction journey have all led to positive sentiment and an improvement in the overall AUM momentum. I am also happy to share that our MFD NPS score, Net Promoter Score, around performance, sales engagement have improved significantly during the quarter from number 3 to number 28 as of Q4 2024. On the alternate business front, to meet the growing needs of HNIs and family offices, we have strengthened our team to enhance our PMS and AIF offerings, both in equity and fixed income. We currently offer over 13 products in PMS and AIF. Our good investment performance experience across our current offerings in PMS helped us in getting our products being sold in some of the organized channels through the launch of ABSL India Special Opportunity Fund, which is a Category 3 AIF, where we are seeing traction coming from the HNI investors. In order to further expand our AIF product offering, we have brought in a senior man investment professional to offer fixed income credit-related AIF to cater to both institutional and HNI customers. We believe both equity and fixed income AIF product offering will further strengthen our alternate business vertical business plan. Our GIFT City operation has gained momentum with the launch of our few products to invest in the overseas market under the LRS scheme. We will launch the industry first ABSL Global Emerging Equity Fund. The strategically fits into Arga Emerging Market Equity Fund, enabling our investors access and benefit from emerging market opportunities. We are now in the process of launching a Category 3 AIF feeder fund in GIFT City, which will fit into ABSL AMC mutual fund schemes in India. At the passive front, as on March 2024, our passive assets stand at around 28,900 crores and have built a strong customer base of around 6.85 lakh folios. To drive our passive business to the next level of growth, We have finalized a senior investment professional with extensive international experience to manage our passive business growth, and he will be onboarded very soon. Moving on to the financials, we at ABS AMC are happy to inform that we have achieved our highest ever profitability in FY 2024. Profit before tax is at 1,008 crores, up 27% year on year, and profit after tax is at 780 crores, up 31% year on year. For FY 24, our total revenue is at 1,641 crores, up 21% year on year. In Q4 FY 24, total revenue is 440 crores, up 31% year on year. Q4 FY 24, profit before tax is at 268 crores, up 48% year on year, and profit after tax is at 208 crores, up 50% year on year. We are pleased to announce that the board has proposed dividend of rupees 13.5 per share for FY 2024. With this, I would like to conclude and open the floor for any questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Swarnabh Mukherjee from B&K Securities. Please go ahead.
Thank you, sir, for the opportunity and congrats on a good set of numbers. 3 questions from my side. First, on the top line yields that we have recorded, so there is a sequential expansion. I wanted to understand the levers for the same. Is it product mix or anything else that we can read into it from that expansion? And simultaneously, if you can possibly give some cuts on how are the yields in the specific product segments and maybe flow versus stock, how the numbers are panning out. So that would be the first question. Second is the monthly SIP flow that has kind of seen a good jump in this quarter. Wanted to understand how in which schemes you were seeing the incremental flows, and if you could also give some color on what kind of distributors these incremental flows are coming from. And thirdly, on the cost structure, so this quarter vis-a-vis last quarter, there was an increase in both employee expenses and other expenses. So if you can guide us, how should we look at this number panning out in the next year, and any one-offs in this?
Sure. I'll just ask Parag to take the first and the third question.
Yeah, sure. Thanks for Prabha. So on the revenue side, the increase in the revenue is in line to a greater extent with the AUM growth which we have achieved, and the mix of overall equity AUM and debt AUM. So that has resulted in growth. Plus the growth is also on the total revenue has been higher with the increase in the overall other income also. So those are the main reason on the revenue side. The other thing on the yield which you have asked, yield on the equity is in the range of around 68 basis, and on the debt is in the range of around 23 to 25 basis. Liquid is more or less around 12 to 13 basis. So that is on the yield side. On the expense side, people cost has slightly increased, mainly due to some true up on the VPay or the bonus, which has resulted in slight increase on the VPay side. On other expenses, the main increase is generally in the last quarter, you will see some uptick in the other expenses in most of the last quarter of my earlier years also. And the event which we conducted, Voyage, was one of in the other expenses which happened in the last quarter. So those are the main reason for the uptick in expenses.
Yeah.
Understood, sir. So, sorry, if I could just follow up on these couple of responses, sir. So other expenses, Next year, how should we build this? And I guess voyage would be an annual event. So should we then also factor in that it will again come in the similar cost will come in the fourth quarter next year?
Yes. So the voyage will be annual and it will come most probably we'll do in the same similar quarter next year. I don't know what will be the format, but if it comes in the same format, there will be a cost in mostly in last quarter slightly jump up.
Okay. And the cost inflation between this year and next year, should we kind of build in a similar run rate as we have seen in FY24?
Yes, on people side, it will be more of a inflation plus maybe is some of the recruitment which we do on the sales side or the passive which we are or alternate side which we are trying to build. And there may be, but mostly it will be inflation plus something, a couple of the percentile up.
Yeah.
Okay, understood. Thank you.
Ladies and gentlemen, to ask a question, please press star and one on your phone. The next question is from the line of Lalit Dev from Equirus Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity.
Mr. Dev, can you please use your handset mode? Your audio is not very clear.
Yeah, hello.
Yes, please go ahead.
Yes, so sir, I have two questions. So firstly, like on the SIP side, like we have done the material well during the quarter. So could you give us a sense, like in which of the schemes we are seeing higher flows, and also could you comment on the channel side, like from where we are seeing higher flows?
Lalit, just can I repeat the first question? What did you ask? The first one, I couldn't hear it properly.
Your voice is a little feeble, Lalit.
Yes, sir. I was asking on the SIP flows. So we have seen some material improvement in this during the quarter in the flow side. So just wanted to understand, like in which of the schemes we are seeing a higher flows, and also could you comment on the channel-wise flows in the SIP side?
Sure. So the uptick that we have seen in the quarter is the renewed focus that we brought in to build SIPs, given the fact our performance improvement that we have seen across most of our schemes, that gave the aggression to build SIPs in the last quarter. Second, the increased flows have come through a mix of products such as FlexiCap Fund, Pure Value Fund, Digital India Fund, PSC Equity Fund, Small and Mid Cap Fund, and also the Mid Cap Fund. And these are the schemes in which largely we have seen flows coming into the SIP segment through the mix of both the online platform as well as on the IFA channel. I think IFA channels, MRP channels, we have seen a significant improvement over the previous quarter, with the monthly registration going to roughly about 2,20,000 kind of numbers, which used to hover somewhere around 75 to 80,000 for quite some time. So that we have seen is now increased about 2,20,000, 2,30,000 the range. In that roughly about 45 to 50% have come through the online channel platforms, and rest has come from the distribution channels, which is our traditional distribution channel. And within that, dominant portion came from the MFD channel.
Sure. And so like last quarter, we highlighted that there were some redemption pressures in some of the core equity schemes. So like how has that trend been in those particular schemes?
Yeah, I think one of the things that I have seen is, I think gradually the redemptions used to be a little higher for us in the beginning of the year. There has been coming down in some of the schemes, which of course saw outflows because of the category generally not seen much inflows. Second, performance issues are also there. With the narrowing of performance vis-a-vis the peer group, and we also seen a reduction in the redemptions pressures in most of our schemes, and improved performance in some of the categories where the flows have been coming in is also compensate for that as well. I think we are seeing both. I think reduction in the redemptions and increased flows coming in for our schemes. That's I think getting netted off.
Sure, sir. And so just last one data question. Like, could you give us the SIP AUM at the end of the March month?
Sure. Okay.
It is around 69,168 crores.
Sure, sir. Thank you, sir.
Thank you. A reminder to participants to press star and 1 to ask a question. The next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hi, good morning, sir. First of the dedicating questions, if you can give your ESOP expense for the year, and how do you forecast it for the, let's say, FY25, FY26? Second, your employee count as of March 31st. And the third will be, you have given your SIP flows for the month of March. Will be great if you can kind of give it for the past 2-3 months also. Will give us some color of the traction and the pace of traction we are seeing in the channel. And lastly, in terms of the product pipeline, how does it stack up for the next few quarters?
The ESOP side, the expenses is in the range of around 23 or 24 odd crore.
This will be for FY24, right?
Yeah. Yes.
And how should we think of it for the next?
The count is around 1,449. Head count is in the range of around 1,400 plus 1,450.
1450, right?
Sure.
What was your other question?
The other was on the SIP flow for the last 1 or 2 or maybe 3 months.
Yeah. On the SAP flows, Dipanjan, while the number for the full quarter is close to about 6 lakh registration, the monthly run rate somewhere around 2.2 roughly, 1.952, that's the roughly range. I think we are seeing each month the number is showing an improvement. Each month the number is showing improvement. Even though I have not given the month of April too, we are seeing the trend is continuing. I think the earlier the focus used to be somewhere around 2 to 3 lakh kind of number that we used to target, which is now falling in place the last quarter, and that momentum continues.
Yeah. So the thing that I'm trying to understand is here, if I look at the March SIP market share, that's around 6.5% on a flow basis, compared to around 5.7% in December 23. So, if you can give some color on this movement between 5.7 to 6.5 broken up for Jan Feb, or in case if you don't have the data, if you can at least shade some color on how April is shaping up. Will it be like higher than 6.5, or we should expect a stable or lower range in just terms of the flow market share on the SIP side?
Yeah. The way we approach SAP is, given the fact that this is agnostic to the performance and is also something goes very well in terms of adding new customer base, as well as on goal-based investing. The idea is always to have somewhere in the range of about 8 to 9% kind of market share. That's what we gun for. In fact, the peak, though it's true, it was near 2019, 2020. We used to have almost about 13 to 14% kind of market share in SAPs. So that's a little bit higher number to expect right now. I think going by the renewed sales focus that is being pushed and also being agnostic to the market fluctuation, will definitely continue to work towards making these numbers better each month. That's the whole endeavor.
Sorry. So if you can give some color on the product pipeline going into the next 2 to 3 quarters on the equity side.
So in terms of pipeline of products, we have a corn fund. We already have an approval and plan to launch it post-election. We would have launched it in the current quarter, the beginning itself. Given generally the vacation month in the month of May, in place election also is there. I think we'll launch it before 30th June, if possible. That's one product we have, and it's going to be managed by co-head equity, co-CIO and head of equity, Harish Krishnan, along with one support person internally. And we're also looking at filing one product, which is of course under the drawing board, and hopefully we will that as well, but more in the thematic category. On the AF and PMS side, we are seeing somewhat of increased traction, given the fact that our performance has been pretty good in the PMS side, and that is being noticed compared to the other peer group in the same segment. We're also seeing onboarding of our PMS products and some of the alternate channels. But also, I think, should see some kind of increased flows on the PMS side.
Got it. So if I can just squeeze one more question on this particular point. You have previously also highlighted at the start of the year or the last year also that you expect your alternates and PMS business to become a meaningful portion of your revenues maybe 3-4 years out. And probably today you are laying the ground stone for that. So in terms of that, I mean, in terms of the investments on the alternates and PMS space, what should one expect that to be, kind of elevated looking from a medium to long term? And maybe in that sense, your employee additions or your employee headcount additions or your new fund launch related expenses can kind of be a little high, at least for the next, let's say, 12 to 18 months?
Yeah. On the AIF side, our focus has always been to leverage the existing sales force and relationships that we have built over a period of time as a franchisee to build our alternate business. While that strategy continues, each of the sales teams have got separate target to drive the PMS and AIF business, including fixed income oriented products. In terms of team strengthening, we already have about seven people in the PMS sales as the main anchor, and they will of course work with the entire sales force under the head of retail as well as head of institutional business to build that part of overall business. Plus, we also been building direct HNI team, which now close to about 30 people that we have. We intend to have close to about 40 to 50 people we'll have this year. That also will help us reaching out to the direct customers, including family offices. Again, we are creating a vertical under the sales team to cater to the growing needs of family offices. All this put together, we believe AIF and PMS segment should see incremental growth coming better than what we have seen in the last 2-3 years. And that's something we are thinking, but they will not have an incremental significant cost coming from people, but benefit that will accrue from the existing team would be the large focus. And lastly, what we are also doing finally this year, there are two areas as we're looking at building size. One is on the fixed income oriented credit opportunity, which is also pretty big. And we are now brought in a person who have experience of having underwriting capability and managed assets for the last almost 15 years with a successful track record. He has come on board and he comes with the high passion of building credit portfolio which can be offered to both family offices, HNIs and pension funds globally. That's one which I am feeling that we'll be able to build. Second, the real estate AIF. We have seen reasonably good track record in terms of not only, of course, performing well, even giving back the money to the investors close to about 16% kind of range of return that investors got in the last 3 years. We want to build on the base of the success that size as well this year.
Got it. So just one small question. Actually, if I look at the SIP flow share, now that, as I said, had improved from around 5.7 to 6.5 between December and March. Can a similar assumption be made about the improvement in net equity flow market share, including SIPs and all other sorts of flows, lump sum and everything?
Yeah, I think SIP momentum would continue. I think that can be assumed. I will try and, of course, build more momentum on SIPs. See, one of the things which I'm also seeing is the widespread acceptance by the entire sales team to drive on a single-minded focus on building this as a category is very much alive and that's being pushed actually accordingly.
Got it. Thank you, sir, and all the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi, good morning, sir. Just follow up on the previous question. How has been the trend on the overall equity sales on a net basis? What has been the trajectory? Well, SIP has been doing really well for us, but what has been the trend on the overall sales, net equity sales for us and in the current quarter versus the previous quarters?
Yeah. I think overall sales is actually improving on a quarter-on-quarter basis. This quarter, we have seen net equity sales. Earlier, we used to have the redemption of the equity used to be high, which, as I mentioned earlier, that trend is changing. And the month of quarters, September, March quarter, we have seen net equity flow. Though we don't have the number disclosed generally, but that's something I'm seeing in the month of the last quarter. Sorry.
In the last quarter, again,
the flows are largely through the mix of our thematic funds, as well as one or two actually managed funds, including funds like FlexiCap, Pure Value kind of funds, and we also seen inflows coming in the arbitrage fund.
Got that. And sir, the momentum in SIPs that we have witnessed, where is this coming from? From the online distributors, or is it across channels? Could you split that for us?
Yeah, I just shared the number earlier in one of the question. Broadly, is coming from roughly about 40 to 40% comes through the online channel platforms. About 55 to 60% comes through the traditional channel. Within that, dominant component come from the MFD channel.
Okay, got that. And sir, on the yield front, you mentioned I think the yield would be what, 68-70 basis points on equity. And how has been the trend in the equity yields in this quarter?
So yield is 68 basis on equity, pure equity.
Okay.
And the slight drop as a telescopic pricing is there. As the AUM goes up, there will be slight drop. So there is slight drop in the yield on equity also.
Okay. Got that. And on the debt side, do we see any improvement in yield given, possibly, from the next couple of quarters or 6 months or to a year perspective, where we could see some movement towards the longer duration assets?
Yeah. So if the movement happens towards longer duration, the yields are generally high in those products. So we should able to see some uptick on that side. So currently it is slightly showing some improvements, but still it is a little long way to go, and maybe another couple of quarters.
So just last question from my side. For FY24, what will be your revenues from the PMS and AIF segments?
Just hold on, Priyesh.
Sure.
So PMS and the alternate asset revenue overall will be in the range of around 100 odd crore.
I'll put it there.
100 crore. This alternate includes PMS, AIF,
and offshore and real estate.
And offshore as well. Okay. Got that. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. The next question is from the line of Abhijit Sakre from Kotak Securities. Please go ahead.
Hi, good morning, everyone. So the first one on the yield, like for some of the peers, there's been some year-end adjustments to ups as well. Has that also played into our yield movement for this quarter?
So Abhishek, our yields remain more or less flattish. There is no per se any. So I understand what you are asking, but no, there's nothing of that sort.
All right.
Increase in the overall AUM, which has increased. If you are specifically asking on equity, it is the overall increase in the AUM.
Yeah.
Got it. And the second was that the 40-45% contribution from online channel that you mentioned. I mean, could you just elaborate? Like this is on count basis, flow basis, and are these like the Grow Zerodha type of channels, or are there any other digital online channels that are contributing?
Yeah, basically it's on account basis. I think value-wise will be a little lower. and value-wise, the traditional channels would have given higher.
Got it.
And in terms of online channels, mostly it's coming from, of course, anyway, as you know, today the large volume generator is only about top 3-4, which is Grow, Zerodha, ET Money, and Provera. These are the large angel. So these are the ones which give the large flows. In this case, I think the large contribution would have come from us from at least 1 or 2 top 3 platforms.
Got it. And sir, Bala sir, is generally, qualitatively speaking, for the next year, given that, the redemption pressure is sort of easing off, do you foresee, products getting included in some of the larger distribution channels and that sort of, creating a stronger run rate of flow? And how close are we to kind of getting that done so that the next year's flow run rate is probably substantially better than last year?
Sure. I mean, that's the end of our, I think if you look back some of the steps that we have taken to strengthen our, on the people side, right from investment to sales to rest of the functions. That definitely bring in new vigor and commitment to focus on every segment of the business model. Investment performance is of course the key, which of course under the change that we have made and the existing team members who also got higher responsibilities performing quite well is being now noticed. The gaps are narrowed quite significantly that used to exist maybe about 1.5 years back with respect to the peer group. And even in terms of upgrades of our teams from ranking point of view, also we are seeing a quarter-on-quarter improvement. One of the reasons we've also seen pickup and higher recognition is also coming, which I just mentioned, my NPS score, which I mentioned about. All these things are a reflection of that. I think one of the things that I witnessed big positive change when you did an annual investment voyage event the month of February. We not only had more than 1,800 people turned out for that, we also saw the reaction from the partners who came on board. Because they have been witnessing us growing substantially well. Then they have seen our period of challenge, our share of challenge period, I would say, and they have seen everything. And this time around, the feel-good factor which came on that event that we had also was actually quite promising.
Thank you so much for the answer.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. The next question is from the line of Madhukar Ladha from Nuvama Wealth. Please go ahead.
Hi, morning. And sir, two, 3 questions. First, can you give the number of what is the average SIP flow for the quarter? You've given for the month of March, but can I get an average number?
Sure. One second.
It's around 2 lakh, Madhukar, on an average.
No, I mean the flow number.
Okay.
Not the registration number.
Just give me a second, Madhukar.
Oh,
Around 1,400 for the 1,143 average, and total is around 3,429.
1143. Yeah. Okay. Got it. So, on our equity market share, that is at 4.9%. Now, it seems that still on a slow market share basis, we are probably lower, right, than what our stock market share is. Because market has been positive, our schemes have been performing well, and yet we are losing market share. We've lost sort of 10 basis points QOQ. Is that reading correct?
Yeah, from the number point of view, what you're saying is right. I think the way I see is Madhukar is one, when you look at the past trend and how it's come to the March quarter, when we're seeing narrowing of fall. Earlier the rate of fall was little higher, and that's now getting narrowed, and increased traction coming on SIPs that will start reflecting in terms of not only stabilizing the market share movement, and it should also, ideally speaking, start giving at least an uptick on the market share. So that's the way it has to be seen. What you're saying is right, but that's the way it has to be seen.
Right. So, what you're saying is that trends are improving and, I think first half we had net outflows and, now we are seeing some inflows. And, we've, in the past, highlighted that certain channels we don't have access to, and those are some of the disadvantages, right? Now, given this context, how do you think that, and over what time frame do you think you can actually go back to this, at least this 5% sort of slow market share? I know apart from performance, on the distribution side, what else can we do or what are we doing? I also noticed that you've done well on the direct side because we're seeing in equity the direct contribution has picked up meaningfully. I mean, 200 basis points on a QOQ basis also is quite good. So maybe some color over there will be helpful. Thanks.
Yeah, sure. See, as you rightly said, Madhukar, one is investment performance is only one part of it. I think sales productivity improvement, which you call it a sales excellence model that we have set aside, and making some core changes within the sales team structure to bring in a sharper focus, identifying the location in which where we have a huge potential, identifying the channel partners where we have huge potential in terms of improving further, looking at their active business that they generate versus the contribution that they give it to us, bringing in sharper focus on each of these areas. Under the head of retail who has just joined us very recently, also have been driving the whole team and bringing necessary changes in order to increase the sales productivity. Ultimately, the idea is actually to increase the output from every location which we operate. So that's one agenda. Second is building SIPs. We have always been quite successful as a fund house, building SIPs in various market volatile period without on the basis of the goal-based investing, and bring that back as part of your narrative to entail sales team actually go out in the market with high conviction both on the steps that we have taken on the investment side and improved performance that we are seeing in, and product being relevant from the customer point of view, and therefore have the high engagement for increasing the productivity. So that's something we are doing it. The support channel, I just mentioned in my speech, the support channel that we have created, earlier we used to run this as a silo channel. We felt that some of those channels which can attribute to the sales team directly from the retail sales team point of view, we are clubbing under the sales team so that there will be higher synergy that can be created to make each of the channels contribute to the overall success of the retail AUM. And last is actually digital platform engagement is also essential given the fact they help in terms of getting new customers additions. So that we have a strategy to ensure that we are able to highlight some of the products which can come as part of the recommendation list on ongoing based engagement, and show them actually the work that we have done and how the performance of these schemes are coming, how those engagement to ensure that we are able to get participation in the new customers. In fact, in the quarter of March ending, we added close to about 3.5 lakh new customers that we added during the quarter.
Understood.
Yeah.
And anything special to read into the direct contribution increasing in equity AUM mix?
Yeah, that's basically, as you rightly pointed out, the exclusive team that we have created, and then we branded under the name of CAD, which is basically to ensure that we provide better service to those customers and handle them on a continuous basis and overall allocation pattern. We are seeing the high engagement that the team has been creating, and where we are further strengthening the team to close to about a 50-member team this year. And that renewed the focus, high engagement would help in terms of increasing the direct traction. The ultimate idea is actually make the direct team is more like a wealth manager kind of concept, help in building a holistic experience for the customers and thus increase the share of their wallet share to both our equity schemes and other products including PMS.
On the passive side, there has been some reduction in AUM. Not a lot, but there has been some small reduction. So any comment over there? And second, I wanted to ask again on the passive side, is there any possibility or of the EPFO money being given to additional set of asset management companies? So would it, at what time, what is your expectation over there?
Sure. See, on these on the passive side, reduction was largely on account of maturity of some of our debt-oriented index fund that we had. Of course, the money has gone into the mutual fund schemes. Have got shifted from ETF to index funds to mutual fund. On the equity side, we have seen growth both on AUM as well as customer addition. As far as the EPF are concerned, of course, we do have participated in the bidding process and keeping our fingers crossed whether we'll be able to win the mandate.
So when is the decision expected on that, and how many companies is the EPFO office expected to select now? Because I think Nippon was the last edition, and then you're talking that again they've sort of invited bids. So just wanted to understand what frequency that is happening.
There's absolutely no idea in terms of how many people. Of course, I'm sure they will shortlist about 5-6 names, but right now, no publicly available information is available on this.
Understood.
Yeah.
Okay. Thank you. That's it for me. All the best, sir.
Thank you. Thanks.
Thank you. We'll take a next question from the line of Abhishek Saraf, an independent investor. Please go ahead.
Good morning, everybody. Thanks for taking my question. So, sir, I just had a few questions regarding, if I heard right, that in the call somebody mentioned that our SIP shares during 2019-20 used to be around 14-15%. Is that right, sir? I heard it right?
Yeah, on the SIP, yes, Abhishek.
So, sir, if you can help us understand that why are the SIP share slipped from there to where it is currently 6.5%? And given that we were targeting around 8 to 9%, so how we will reach there and within what duration? And secondly, on the equity redemption side, it is very heartening to see that the redemptions are not happening, or it has come down, which is somewhat counterintuitive as well, because at a higher means at the high level of markets, people may want to book profits. However, so what is changing fundamentally, if you can help us understand? And if I tie this with something which was said by an insurance company, in the ULIP funds, they saw actually a decent redemption happening in the later cohorts, after 5-year cohorts. So somewhat there's a bit of dichotomy as well, and maybe something is changing fundamentally. So if you can help me understand and share your thoughts on these two questions, sir, it will be very helpful. Thanks.
Thanks, Abhishek. As far as SIP is concerned, of course, we took a really more advantage of pushing SIPs as a fund house, having seen market cycles. I always felt that SIP is the best way of building our equity size, and that's why we built our leadership position till about 1920. And for a variety of reasons, volatile period, and then more and more competition coming in, and a few large AMCs who are underpenetrated in the industry, which all of us know that few large fund houses did not have major assets till 2019-20, and they actually upped the game in the overall business growth. Therefore, the growth for some of them actually were exceptionally higher than even the market average because they were underpenetrated. So that led to some fall in share. And of course, there are certain schemes where you have built huge skies where we got on the performance. There was of course performance lacking for some time, which I must admit for a brief period of time. It also led to a drop in SIPs, which I feel that we can get back. SIPs are something we have always been promoting, agnostic to the performance. That's the only way we can build SIP from a longer term goal perspective. That narrative is completely we're driving to the team that irrespective of that, we must build SIPs. Ultimately, investors do get benefit in the long term, and there is no much difference you will find between good performing fund or bad performing fund if the investment is made in SIP for long term. That's something communication are making more strongly and making them realize in terms of building size. That's something I just want to highlight. The other part is in terms of growth. I think as I mentioned, I think if we keep pushing our the renewed engagement that we have on the investment side, engagement at the ground level, sales productivity focus that I was bringing in, all put together should only help in getting renewed participations coming from some of our existing channels who have always been loyal to us. Secondly, new customer additions continues to remain the big area of focus. We all put together, like when we put a strategy that renewed focus on emerging market expansion. I think all of them put together should help. And also the ABC expansion that they are doing across the country should also help us in getting money coming from some of the other customers of our overall financial business. All put together, I feel that the overall improvement will keep progressing.
No, thanks for that, sir. So on the redemption side, if you can help me understand is what is actually holding back customers from redeeming. It's a good sign, but are you feeling some change in the customer behavior at the customer's end or the investor's end?
No, I think generally the redemption is largely in the nature of profit booking and then come back. I think it's more about timing. At the same time, historically I've seen the trend. Whenever the market either becomes stagnant or volatile, we see that as a trend emerging. But otherwise, I only see the incremental participations would be good mix of from existing customers or new customers. But it's very difficult to find any kind of trend on that. And given the fact the broader acceptance for MF and the renewed aggression that we as a fund house bring on the table, all put together should only help in looking at the improvement in sales rather than just looking only the redemption as numbers.
Sure, that's helpful, sir. So one last question, if I can just squeeze in. So as you mentioned that the equity yields are around 68 basis point handle, and given that there will be a telescopic effect on the yields, and assuming a normalized market, so what kind of yield one can expect, especially in equities, one can expect over the next year?
I think we have more or less we have said in one of the other question as well. I think as it stands today, we will be able to maintain the overall the margin expectation coming from both an equity and fixed income. Maybe on the fixed income side, we'll see there is scope for that to improve a little bit, given the fact that the product mix within the fixed income could also change.
Okay, sir. Thanks for this. I'm done with my question. Thanks a lot.
Yeah, thanks.
Thank you. Ladies and gentlemen, we now request you to restrict to 2 questions, please. The next question is from the line of Janvi Jare from Kaizen Partners. Please go ahead.
Hello. Yeah, I just wanted to ensure that during there has been a sudden increase in the influx of passive mutual funds gaining predominance in the market. So how do you believe that in the next 5 to 7 years, as people would be shifting to passive mutual funds, where there would be very less opportunities for market share and everything. So how would you envision yourself in the next 5 years in comparison to these mutual funds, these passive mutual funds as compared to active? And majority of the inflow will be, as has been predicted, will be in the vertical only.
Yeah. Well, as a fund house, I think we look at offering product to customers across the segment of the market. Will remain the active manager both on fixed income and equity. At the same time, we'll also build our capability, rather our product offering in the passive space. As you know, passive, the last 1 year, if you see, active funds have done far better than passive, and before that, passive was doing better than active. Given the fact that Indian market have got huge potential to outperform the market, and that I think active will continue to be the focus area. But in our case, next say 4 or 5 years, we are building our capability on the passive side. Hopefully, we should see a little bit higher momentum coming at the passive as well. And within the passive, we'll bring in fine focus between product which can be more profitable as well by looking at product differentiation in this space. But I think from industry point of view, we will see growth on active will continue to be the driver for some more years, while along the side, passive also will get built.
Thank you.
Thank you. We'll take that as last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Yeah. Thank you, and thanks all of you for taking time out on a Saturday to attend this call. And with this, I'll conclude Q4 FY 24 earnings call. Do feel free to reach out to our IR head, Prakash Bogle, for any queries that you may have. Thank you.
Thank you, sir. On behalf of InCred Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.